Hey traders, checking in on the stock market today. So not a whole lot going on in the S&P 500 by the time we closed, but we still have the rotation game going on. Some sectors standing out a lot more than others. We know the QQQ bulls still have proving to do, and I'm going to go over some trades and some new tickers that I'm keeping an eye on for the rest of the next couple weeks. So as we can see on the S&P 500 futures chart, we had the big day Friday. We closed right up near the all-time high, and we're still right there. And that's even with the financial sector down 0.8% today. So again, the money is just swirling around. We saw money pouring into tech and semiconductors. We saw money leave those sectors. We then saw it go into the financial sector and laggards. We then saw it leave a little bit over the last couple of weeks for consolidation. And now we're seeing it back into the healthcare sector. Big few green days here. The utilities sector has been extremely strong over the last couple of weeks. The consumer staples sector has been extremely strong in the last couple of weeks. So again, the money is going somewhere. It's just bouncing around. And that's leading to when things are very clear and in one direction, like the dump back a year ago, and then the bounce, it was all in one direction. It was a river. You got a current in one direction. Right now, what you're seeing is the waters swirling around, and it's a lot less clear. So it's important to be staying on top of everything, but it's also important for traders like myself to, again, slow down a little bit when things are less clear. So, S&P 500 up at the all-time highs. No red flags there. The NASDAQ, I've been watching the futures chart. We're in a daily downtrend. The bear break on Thursday saw a lack of follow-through. Anything under the high of last, what was that, Tuesday, is a lower high. So looking at that on QQQ, anything under 321.09 is a daily lower high. And the question we have now is, can the bulls break that resistance level from here, or do we set another daily lower high? And then from there, if we set another daily lower high, it's up to the bulls to try and set up the daily trend change. So today, if you look at QQQ today on the 15-minute time frame, it doesn't look clear. We had a bullish start and then a drop, and then we bounced a little bit, new high of the day, then a drop. So I'm finding clarity on the futures longer term time frames, the 4-hour chart. Because what happened this morning is we set a higher low at 1 a.m. The bell rang this morning. We rejected from resistance and we dropped all morning. And it looked like, up here we go again. QQQ bears have complete control. But we held this support, keeping the 4-hour higher lows going. And then we broke resistance into the end of the day. At this point in time, that resistance break has not seen much follow through, but the higher lows are what matter, because when the 4-hour higher lows are lost, our daily lower high has likely been set. If I am looking at QQQ, it's the hourly that I care about. And the weakness we saw this morning was still an hourly higher low compared to the low of Friday. Friday had that huge move into the close. The low of today is an hourly higher low. And it's the hourly uptrend that matters to us. When we lose the hourly uptrend, we are likely seeing QQQ set the daily lower high. So again, I'm using the futures chart because it's more clear, it's more information, there's more continuity, and I just like it better. IWM, daily lower high set on the bounce. It was a really nice bounce off of the double bottom at 207.21 and 208.03, and now it's up to the bulls to change the daily trend. If we're going to believe that this support level can hold, we must hold 208 and break 220.93 for a higher low and higher high. Anything less than that, and the bears keep their control. And we closed at the low of the day, as we're seeing IWM, one of the weaker sectors today. Financial sector, daily lower high set, because we broke the low of Friday. But anything above 33 is a daily higher low. Bigger picture, we're looking for a weekly higher low, and it is a possible weekly bull flag, absolutely. And if you want to see the S&P 500 bulls confident, you want a new all-time high in XLF, of course. So best case for the bulls, hold 33, break the top of that bounce, 34.43, confirm the daily trend change, and just like that, we're going to be right back looking at the all-time high if that takes place. Bulls have to confirm the daily trend change for our weekly higher low to be set. There are no red flags in XLF at this point. Simple statement. Keep it simple. If $33 holds, the bulls have complete control of the weekly time frame. That level is a must break for that statement to change. XLV, again, we went over the clear bear break and lack of follow through. which was a red flag for the bears, breaking that channel, and it's been nothing but bull follow through. And the all-time high is 1% away. So 119 is the only resistance, and that would be a monthly bull flag if that were to confirm. So we've got XLF fairly close to the all-time high. We're 3% away, 3% and change. XLV, a little bit more than 1%. We'll call it 1.5% away from the all-time high. But they're both right there, and they can definitely see it along with the S&P 500. Biotech sector is notably weak. And it stands out to me because the healthcare sector is strong. There's been many times in the recent past where we see the biotech and healthcare sector correlated. Certainly not over the last week. XBI is still all bears. And from here, we're just looking at the low of March, 128.44, closing at the low of the day. And we're on the verge of another leg down. Bigger picture, we're looking for the biotech bulls to give us a monthly higher low. But if we break that low of 128.44, I'll then be watching the monthly EMA 12 as the next level. So again, the swirling environment, IWM weakness, XBI weakness, XLV strength, XLU strength, XLP strength. We have strong and weak sectors, and they're changing every couple of weeks. Semiconductors, real strong Friday, but pulling back today. Stronger than QQQ, but correlated to it. If the inside bar breaks bullish, 240.258 is the resistance level to try and break the high of the bounce, which would be a little weekly higher low, and then having us look back towards the all-time high if that break takes place. But if the inside bar breaks bearish, it's a triple top at resistance, and we then look for the bulls to try and form a daily higher low compared to 224.41. One more note on the tech sector. There's names that are giving us broadening wedges, and I personally don't like broadening wedges as patterns. I find them a lot less clear. So if we're looking at, I'm just taking extended hours off to make it a bit more clear, but Amazon's 4-hour time frame is a broadening wedge, where you have a resistance break into a support break, into a resistance break, into a support break. I don't like that pattern. So when I recognize it, for me, that means don't trade it. That being said, I'm sure there's plenty of traders out there who trade it successfully. It's just not one of my ideal patterns. It's not one of my edges. But it's certainly the most confusing pattern for price action traders. If they don't recognize it, they'll get faked out back and forth. And Netflix is doing the same thing. So if you're looking at the tech sector and you're looking at QQQ and things feel a little bit choppy, it's because this is going on underneath the hood. Netflix is doing the exact same thing as Amazon. Bull break into a bear break, into a bull break, into a bear break. TAN, weak. Daily lower high is set at 88.11, and only support is 81.07 and 80.80 as far as nearby levels. It's clear to me we're seeing continued weakness. Okay, we had correlation, QQQ, and Biden names. Biden names were solar, MJ, EV. And we are seeing, for the last couple weeks, comparative weakness in those three sectors to QQQ, and it's still happening. So I'm watching for that shift to take place before I have confidence looking in these names bullish, because I don't want to be playing sectors where the sector makes a bull move and then this sector follows along slightly weaker, and then they pull back the same amount. So I am waiting for the correlation to shift. And we saw small shifts in correlations. NIO gave us Thursday where it was bullishly correlated to QQQ. Didn't last long. We want to see multiple days where that's the case. But that's what I'm watching for now. Because TAN is weak. We're going to be watching for a potential falling wedge-like pattern here. I'm not going to take my eyes off of it. But TAN is weak. The EV names are weak. NIO bulls didn't really do anything today. Neither did Tesla. I'm watching them over the next couple of days for the correlation to shift, but it's not shifting yet. MSOS, weak. Daily bear flag confirmed. Weekly head and shoulders confirming. We're now in a weekly downtrend, which means zoom out, and we're scouting a monthly higher low. I will be interested in monthly higher lows in the sector, but I'm back to all cash. I sold this morning. I sold half last week and the rest this morning because, again, I'm just not going to sit through a name showing me bearish correlation. I'd rather enter higher once the bulls prove it to me and have a bullish correlation. So if things get extreme into oversold conditions, I'll be interested in this sector again, knowing monthly higher lows are the most likely scenario. But enough's enough. Lots of relative weakness comparative to QQQ, and I just don't like the positioning of these sectors at this point in time. That can change quickly, but I prefer cash while I wait for it to change. The VIX, sideways. And this looks like a broadening wedge as well. Resistance break with no follow through, support break with no follow through. So again, broadening wedge, choppy. Choppy daily. The dollar is all bull still. Higher low every day for the last 7 days. We know there's plenty of space for a daily higher low next time we consolidate, and the bulls are keeping complete control of the bounce at this point. Gold, bear break. We were watching this 4-hour pattern that had a fake out for the bulls, and now convincing follow through for the bears. So this was the pattern. There's your bear break. Zooming out to the daily, bulls must hold 1676 and break 1756 if they're going to prove anything to us as far as a trend change. Burden of proof is on the bulls. They haven't proven anything in a while. It's a potential weekly bear flag, and weekly RSI will get oversold if it confirms. Silver, down at the low of last week, hasn't broken yet, but the most clear thing for me on silver is every single bounce has been a 4-hour lower high over the last 11 days. A very clear pattern. And on the next bounce, if we don't break 25.26, it's just another lower high. So the metals are remaining weak as the dollar remains strong. One thing to note, GDX, and I'm going to start watching GDX instead of GDXJ because gold is gaining some strength against silver. But GDX closed at the high of the day. And the metals didn't close at the high of the day. This is how gold closed, an hourly tightening range, and silver closed in an hourly tightening range as well. So let's see if that's a clue for the metal bulls to try and show up overnight. Because again, if we were seeing the same pattern as the metals, right now, GDX would be trading right around here. Tightening hourly range as opposed to bulls buying the morning dip and even breaking the high of Friday, which again is notable. You look at gold, where are we compared to the high of Friday? Not even in the picture. Same with silver, not even in the picture. Notable for the miners. Oil, 12-hour did change the trend bullish. Next resistance level is 62.04 to try and see follow through. So it's a 12-hour uptrend. Zooming out, I'm scouting a daily lower high and scouting a weekly higher low. What do we need for a weekly higher low to convincingly be set? Breaking 62.04 would be a good start, but eventually we will need this bounce to top out, and we will need to confirm a daily trend change to have confidence in that new weekly support level. But bulls looking pretty good on the weekly at this point, and again, correlated to XLF. XLE is doing the same, I assume. And over those 2 weeks, where XLF, XLE, and oil have consolidated, what did XLV do? It went up. Again, all these other names that are standing out now, utilities, healthcare, consumer staples, they've all been going up the last 2 weeks. Natural gas daily bear flag failed to confirm, and now we're breaking short-term resistance, so we zoom out and watch the potential of a weekly bear flag. These bulls got to make their way up towards 280 to try and negate a weekly bear flag, and the bulls haven't proven much. They've played defense. Now let's see some offense. Make your way over 270 and beyond, bulls, to prove it. Because again, that's a very weak bounce at this point. Defense is good. Now it's time to go on offense. So I've been keeping an eye on new tickers, and at the end of last week, the forced sell-off, forced liquidation, there's a lot of tickers where this is the case. Baidu, Baba. Actually, I don't know if Baba was part of that. Baidu certainly was. But more importantly, I'm focusing on the names that got crushed. DISCA. Look at that daily chart Friday. Look at the volume. So forced liquidations. And VIAC is the other one. Those are the two that I'm focusing on. Same thing, massive pullback. And what happened, I don't have the time to explain it right now. Google those two tickers and liquidation. And I'm sure Google will tell you all about it. But essentially, they are overextended to the downside because over-leveraged positions were forced to liquidate, and that just created insane selling pressure. There are many lessons to take from this. Number one, this is why you always use a stop loss even if things are oversold. I'll play oversold bounces, and there will be times where I say, man, I really don't want to stop out with this RSI level where it's at, but I have to limit my risk because there's the 1 in 100 chance that the hourly RSI is crushed and we drop another 20% more. And if you don't put a stop loss because the hourly RSI is oversold, you then just took a huge hit and gave back 2 months of profit potentially. So that's a lesson here. But what I'm looking at now is these are new tickers to me. So I spent all day today staring at DISCA because what I need to learn about this stock is what is the bid and ask spread? What does normal volume look like? How does this trade? Does it correlate to QQQ? And I'm just getting these little bits of information because what I do know is we're going to see volatility in these names for at least another couple of weeks. What happens after massive volatility? In the instance of a dump, you find a bottom, you see the scales tilt between demand and supply and demand, and you get a big bounce. And then you look for the daily low or high, and then you look for a higher low and a tightening range. So if this small candle has a range of 13% on the day, I know that we're going to see volatility likely continue here. So some observations. It was clear to me that DISCA today was correlating to VIAC, absolutely, but it was also correlating to QQQ to a certain degree. There are other observations where we had a bull break straight into a significant 2-minute pullback. So bull break gave back a ton of that move, and then we did it again. And when we did it again, I was buying into this weakness, having seen that same thing already take place. So again, just observing. The best trade that I made on this play today was a 1-minute cup and handle. We had a couple, actually. I traded a 5-minute cup and handle and then a 1-minute. So here's the 5-minute with resistance. There's your consolidation. There's your inability to break resistance. And here's your bull flag, which was just on the 2-minute time frame, a little equilibrium that broke bull. And not huge follow through, but multiple percent. So what I was doing was making an entry off of this 2-minute support and then selling into that bull move. And that was QQQ breaking bullish that had a major impact there. So I was staring at QQQ the whole time I was trading it. And then we saw a 1-minute cup and handle. And I played that one as well. High of the bull move, 43. Pull back. Failure to break resistance by 5 pennies. 1-minute bull flag. And so I was aggressively entering in the 42.90s. Putting my stop under 42.61. Why was I using larger positions? Because my stop is right there. If it's a bull flag and a cup and handle, that level holds. If it's not, I'm wrong and I want to stop out. So real small risk, real large position. And then again, just instantly scaling out. That bull move lasted 5 minutes. And by the time this 1-minute candle happened, I was out of my position. And there are definitely times where I will leave money on the table doing that. But again, I'm just locking in the day makers, not wanting to give any back. And now we have tightening hourly ranges. So the moral of the story is when you are trading new tickers, first moral of your story is use your stop loss even when things are overextended, because once in a however many times scenarios take place and can really hurt you. And number two, when you're trading new tickers, get to know them. I'm trading it with smaller positions. I'm getting comfortable. I did this with Tesla a long time ago and made a bunch of money day trading Tesla. I did it with NIO after that, made a bunch of money day trading NIO, both directions. I don't care what direction these stocks go. I'll trade them whatever direction they're in. But I have to get to know them first. Because if I trade a full position size when things are new, which I've done before, I then say, oh God, this is a gross bid and ask spread. There is way too much risk for me to have this position size in this stock. And I learned the hard way by taking a loss. So today was research for me. And I will implement that research and the information that I am learning over the next 2 weeks while I trade these names a bit more often. Hope you had a good day. Shortened week today. I believe we've got Friday no trading. Keep that in mind for options expiration. And we will see you tomorrow. Have a good rest of your day. Do good things. So there used to be a big mulch pile here, and Mod Jungle Funk helped me. He pretty much did all that. Weeded this out and covered it with mulch so we won't have to battle weeds for a couple months. You can see all the leaves are starting on all these blackberry bushes. There's a baby persimmons tree over there, apple tree. I don't even know what the trees are, but they are some fruit-bearing trees. I'll probably either put tomatoes here or watermelon. Haven't decided yet. And that's just an example. You know, I'm paying Mod Jungle Funk and he's getting his side hustle on, so he doesn't have to take living expenses out of his trading account. He is able to pay for stuff with outside work money. And that's what I did over the years when I was starting. I was doing painting houses and doing yard work, because the more you can leave money in your account, the faster it can grow if you are compounding your gains as opposed to constantly pulling from them. And there was a period where my account stayed at the same value, pretty much 25 to 30,000. I stayed there for a solid couple years, and that was all living expenses. I would just pull living expenses out, and then I would just bounce around in that area. And as soon as I stopped pulling living expenses out and allowed the gains to compound, that's when things started to level up. And these tulips are starting. Hope they survive the frost we're supposed to get. Pretty solid freeze, a couple days this week.